All right, Scott Cohen, thanks ever so much. Now, we're back with Robert Froelich and Peter Schiff. Peter Schiff, I know down the road you're worried about inflation, but I just want to note, commodities have been falling lately. There was a little bit of a bounce up in commodities, which made me think maybe the global economic story was stabilizing, but commodities have been falling. Last bunch, 8 or 9 days, they are what? They're about 4 or 5, they're about 7% off their peaks, Peter. What do you make of that? It looks like more deflation going on here.
Look, I just think it's a temporary sell-off in commodities. Look at the price of gold. It was up about another $20 today, despite the temporary strength in the dollar. In fact, gold made record highs today against a number of key foreign currencies, particularly the British pound. If you look at the Dow Jones, the Dow closed at 9.4 ounces of gold. That's a new low for the bear market. The fact that gold is so strong in the face of commodity prices temporarily falling and the temporary strength of the dollar speaks volumes to me. And that shows that people are getting wise to the cons being pulled off by these central banks. They understand that it's inflation all the way, and that is the problem. Newmont Mining up 4% today alone. Okay, Dr. Bob, let me switch gears, though. Look, I'm still going to maintain against this horrible news, and a disappointing inauguration speech, I think, is how this is going to be judged at the end of the day.
The market judged it.
The market's clearly judged it badly. But look, the fear spreads in the credit markets have been falling. LIBOR, TED spread, 2-year swaps, whatever. The inflation rate, nobody much covered it last Friday, but the CPI is now 0, and the energy tax cut, the retail gas at the pump tax cut is huge, and the Fed is expanding the money supply rapidly for the first time in a couple years. So I still believe it is possible that we could have a better economy this year than people think.
I think it's more than possible. I think it's probable. And I will tell you, what we don't have anymore is patience. These things take patience to work. Monetary policy, the Fed moves rates, the stock market responds immediately, but it takes time to work its way into the economy. We have 500 basis points coming in the pipeline. Yes, we know there's not a lot of confidence, but I know one thing, Larry, monetary policy works. I also know that fiscal policy works. We got a lot of fiscal you throw enough money at a problem, some of it's going to stick, some of it's going to work. And I'll tell you that, yes, I know consumers are worried right now. They're worried about their job. But this is the largest energy tax cut in the history of the human race.
The economy is not going to improve because of this plan. We might dig ourselves into a deeper hole, but that's it. It might look like things are getting better as we spend ourselves into a bigger bankruptcy. But this is all an illusion. And you don't solve economic problems by printing money. You solve problems by working hard, by saving, by producing, the exact opposite of what we're trying to do.
But, Peter, it is true. I agree with you. The Fed can create money, but they can't create production and investment. But it is true that the drop in world oil prices, very positive for corporate profits, right? Their cost structure comes way down. And the drop in retail gasoline prices is a very positive tax cut for consumers.
That's assuming, Larry, that's assuming that the drop is permanent. What I'm saying is this drop is temporary.
Well, it's permanent for 6 or 8 months. It's going to have an effect.
For 2 years, it's permanent. It's not coming back.
I mean, you don't
How do you know that? How do you know? How do you know that the prices won't rise as fast as they fell?
I know that we may have trouble in the United States, but it's a heck of a lot better than what's going on in Europe.
No, it's not. No, it's not.
Deficit at 11% of GDP, England at 9% of GDP, Spain at 6% of GDP.
But we're the debtor nation. We're borrowing from everybody.
We're in a whole lot better shape than they are.
No, we're not. We're in worse shape.
Yes, we are.
We're the ones that are borrowing from the rest of the world.
Just real quick.
I want to buy health care. I think health care is going to be the defensive play.
You're not worried about nationalizing health care?
No, I don't think we're going to. Too many other things on the agenda. Too many other things on the agenda. Also, selectively financials. I'm telling you right now, I believe in this country. I believe in our financial system. A year from now, people are going to say, yes, I have some downside risk still, but there's tremendous upside potential.
But what is it that you believe in?
Hey, Peter Schiff, let me ask you something, buddy. What breaks my heart is all this news about nationalizing banks in Britain, right? This is the end of the Thatcher regime. She was the one that denationalized all those industries, steel, coal, newspapers, financials. Look what we are now.
Yeah, and we're doing the same thing here with Reagan. I mean, this is not...
Are we doing the same thing? We're going to unroll, completely roll back Reagan. Is that what's going to happen, Peter?
Yeah, this is that the free market is the problem, greed and capitalism is the problem, and government oversight, government control of the economy, bureaucrats are the answers to our problem.
I'll tell you what.
It's the exact opposite.
I heard some of that today in Obama's speech, and I didn't like it, okay? I don't think the speech was all bad, but I heard some of that. I will tell you this. If he goes down the far left path, the voters will take action in the next election in 2010, and they'll come back again in 2012. I believe that.
Let's hope so.
All right, buddy. Bob Froelich, thank you ever so much.
Larry.
Peter Schiff, as always, you're very kind. Coming up on his first day in office, stocks gave President Obama a big, fat Bronx cheer.